Hi, this is Lara from Forex Info USA with your free daily US dollar index Elliott wave analysis for Sunday the 25th of April, just as the markets open trading at the end of the weekend. Starting this analysis with a look at an historical chart, a quick reminder of the bigger picture going back to 1985 and looking at cycle degree waves. We had a 5-wave down structure to end wave 5 cycle degree in 1992, followed by what has a very obvious clean 3-wave structure to end cycle degree wave A in 2001, followed by a very obvious again 3-wave structure to end cycle degree wave B in 2008. Because wave B is longer and reaches beyond the start of A, this is an expanded flat correction. It's a flat correction, we know that instantly by looking at this 3-wave structure of A. Flat corrections break down to ABC and the A breaks down into a 3. Of an expanded flat correction, we can usually expect the C wave that ends it to be a long, strong C wave that reaches significantly past the end of wave A. So I have an expected target for the next few years. These cycle degree waves are taking about 7 or 8 years to complete, and I expect wave C will probably take about that long as well. About 140 at the end of it for the dollar. In the shorter term, however, we're working on within this wave C, it's going to break down to a 5-wave structure. And it looks like a regular impulsive 5 waves with a 1, 2, 3, 4, 5. At the moment, we're still in the middle part of this wave C and just in the early phases of that. We're in primary wave 3. Primary wave 1 was 17.73 long. If wave 3 reaches up to reach equality with wave 1, we could expect the dollar to end this primary wave 3 around about 91.91. However, a more likely upside target for primary wave 3 is where it would be 1.618 the length of wave 1, or very reasonably close to it, which would see the dollar rise up to 102.87 either December this year or August next year, I expect, using Fibonacci time relationships between these waves. Taking you now to a regular daily chart just for the last 6 months, where this maroon 2 down here is this maroon 2 down here, and we're looking at recent dollar rises with the minor 1, 2, 3, 4, 5 to complete intermediate wave 1 up. And I've played with this channeling, these trend channels, to see if we could reasonably contain it, including this piece of movement here. If we draw a trend line from the bottom of what I have labelled blue A to the bottom of what I have labelled blue 2 and place a parallel copy either on 1 or 3, it's not containing this upwards movement for intermediate wave 1 nearly as nicely as this trend channel does. It leaves far too much open space over here at the top of 1. So I expect this is the correct application of Elliott's channeling technique in this instance, which gives me further indication that intermediate wave 1 did end here and we're not in a 4th wave of minor degree, we're in a 2nd wave at intermediate degree. Thereafter we've had a 3-wave structure down for wave A blue, another 3-wave structure. It's not seen that clearly on the daily, you can see it better on the hourly with an A, B, C up for wave B blue. Wave B blue, I had a target to the upside which was 82.01 to 82.15. It's hit bang in the middle of that target at 82.05. Thereafter, exactly as predicted by this wave count, we've had a good strong trend change and some good downwards movement after that high was reached. Wave B is now a 92% correction of wave A, satisfying minimum requirements that it be at least 90% the length of wave A blue. That's a requirement for a flat correction. We know again that this is a flat correction because wave A has broken down to a very, very strong 3-wave looking structure. Regular flat corrections usually conform quite well to parallel channeling techniques. These black lines here I've drawn first with a trend line from the beginning of A to the end of B and a parallel copy placed on the end of A. We can use this lower black trend line here for intermediate wave 2 black to give us a likely indication to when wave C blue to end wave intermediate wave 2 is likely to end up. Overall, however, looking at this overall structure, it seems that intermediate wave 2 to end with a simple ABC quite a shallow correction and still above the wave 4 of 1 lesser degree seems to be a little bit too shallow and possibly too brief. We may very well be looking at the first piece of a double 3 correction, the first piece being a regular flat, and then we'll have an X corrective structure, and then we'll have another 3-wave structure. And that certainly is a possibility, and we'll look at that when we get there. For now, this wave count is predicting that the dollar should move strongly down. It'll have overlaps on the way, but overall we should move down, and our downside target to end this regular flat correction lies about 79.89. Taking you now to an hourly chart where this blue A and this blue B is this blue A and this blue B down up here. A couple of reasons why I expect that this trend change back to the downside is going to persist for a few days more, and we're not going to see new highs in the near immediate future for the dollar. We do have a little bit of divergence with MACD between this high and this high. MACD is trending down and price is trending up. A little bit more confirmation that this upward momentum is over. Also, using these pink lines, this is again Elliott's channeling technique, a trend line drawn from the high of 1 to 3 and a parallel copy placed on the low of 4. In this instance, we see a good clean breach of the trend line to the downside, indicating that this upward piece of movement is now over, and we should be now in a downside trend that should last a couple of days or so. A word of caution about this trend channeling technique on these lower degrees, at degrees below minor on hourly charts, it doesn't always work that well. As evidenced by this overthrow, we can have overthrows. This could just be a little overthrow, and it could still yet move a little higher to make a new high for wave B blue, although we can count a very good clean 5 waves up to end wave C pink. So I don't expect the dollar will turn back up and move higher. It is a very slim possibility at this stage. I expect we'll continue to have further downwards movement, and we've probably just started and getting towards the middle of this 3rd wave down within wave C. That should be a very good opportunity to the downside on the dollar, and it should move down over the next few days to get down to that target about 79.89. That's where wave C blue will equal wave A blue in length. So that's all from me with your dollar analysis today. I hope everyone out there had an awesome weekend. I hope this analysis helps you when you're trading this week. And as always, may all your trades this week be profitable.